to talk about our good friends over at Bitwise, the $10 billion global crypto asset manager. On this show, we talk a lot about all the big stories. What's driving markets? What does the data tell us? What are you people missing? And as you already know, crypto is playing a much bigger role in macro. So it's becoming more and more important to really understand the stories driving crypto. Why is Bitcoin going up? Why is Bitcoin going down? What are the institutions doing? What are people missing? That's why Bitwise launched the weekly CIO memo, a quick summary each week of what's really moving crypto markets. It's written by the CEO, Matt Hogan. Matt's one of the best in business at bridging the worlds of traditional finance and crypto. It's really a great read. It's clear, it's bold, and it's very thoughtful. I highly recommend it to anyone who wants the latest insights and hottest takes in the crypto world. So head on over to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo. Check it out for yourselves. Always, of course, carefully consider the extreme risks associated with crypto. Hello out there. Welcome to another edition of Macro Mondays. We're sending to you live on various platforms, and we're really excited for this show. My name is Mikkel, Rosenvold, your usual host, and as usual, joined by you, Andreas. Welcome to the show.
Hi, Mikkel.
Had a good weekend?
Yeah, the sun is shining here in Copenhagen. The temperatures are slowly but surely descending towards more acceptable levels here. So, if we can, get the cocktail of sunshine and lukewarm temperatures, I'm good, and we're getting there. So
almost a Goldilocks scenario. We're getting close to that. Usually this time of year brings that here. So Andreas, lots to talk about today. We're going to cover the Alaska summit, the upcoming Washington summit, the entire situation on Ukraine and the peace talks there. Obviously a main driver for markets right now. Going to look into some of the numbers coming out last week, and also looking a bit ahead at the Jackson Hole conference by the end of this week, and the outlook for the ISM and how that might affect your positioning. Lots to talk about, Andreas. But before we get to all that, remember, listeners, this is a sneak peek into all the research that we do and publish at Real Vision. You need to be signed up for the approach here to get it all, but in this show, you're going to get a sneak peek and a general understanding of our view on the world of macro. Remember, though, even though we try to be as accurate and actionable as possible, that, and this is our usual disclaimer, our content and our ideas might be
sometimes may be good, sometimes may be shit.
There we go. And Andreas, speaking of sometimes maybe good, sometimes maybe shit, let's kick off with some of the laughs of this week. We need to have a bit of that. I don't know what's a good introduction. I just need to show this picture. This is the former Estonian Minister of Agriculture, Rani Elmer, I think his name is. And I know, Andreas, you've always had great hair. You've been a bit more experimental with yours than mine. What's your analysis? What's your take on this haircut here, Andreas? Is this something to take inspiration from?
Is this guy involved in the Ukraine negotiations, or did you just watch it during the week?
There's no angle. I just think it's a lovely haircut. We've been talking about the Trump administration having a lot of good ramps recently.
Good haircuts.
I don't even know what to call this, Andreas.
No, but I my short take on it is that it takes balls to leave your ears exposed like that. I mean, apparently he likes his ears.
It's just that, Andreas. On to another picture. This is me at my wedding. This is obviously the Fogcoin version. I was having a feeling last week, Andreas, that I was being a part of a pump and dump without actually owning the asset. I think that's pretty much the worst position you can put yourself in. Fogcoin had a great end to last week, stagnated a little bit over the weekend. So it seems like I'm out of the woods, still nowhere near all-time high. Am I in the wrong for not getting in on the Fogcoin? What do you think, Andreas?
I guess Fogcoin is another sentiment gauge, right? But as I said, I think it was a couple of weeks ago, where our comment section was full of these pictures of us with our so-called fuck fingers. And I think it's pretty smart marketing. I have to admit to that. And for all meme projects, you obviously need a good marketing budget and a good marketing strategy. And this is a pretty decent one. Whether there's any merit to this project, I don't know. I'm not the right one to ask. So.
No, for now, the disclaimer is that I do not own any fuck coins, which could be an argument against my analysis. But anyway, Andreas, let's get on to some of the hot takes of the week here. I love this meme. I know this has nothing to do with the PPI numbers last week when you're talking the price of a beef loin New York steak. But do you get the feeling, Andreas? I know you're looking at this, that there is a discrepancy between the official inflation numbers and what people are feeling in the economy right now.
Well, sure, but I think that's been the case for maybe a handful of years or so. Every now and then we see these pieces of anecdotal evidence with, in this case, beef loin doubling in a couple of years, and obviously we need to consider the fact that you have hundreds of thousands of items in the consumer basket, right? But there are bits and pieces currently very, very impacted by inflation, not least within the food sector. That was kind of what we saw in the PPI as well. Material input cost pressures in the producer leg of food prices. The question is whether we'll ultimately see those prices being passed on to Walmart and the likes, right? So I'm still in between on this topic in a sense, because we obviously also had the consumer price index last week, and it showed basically more or less no signs of tariffs inflation, and then the PPI started showing signs of tariffs inflation, right? And as far as I can gather, this is a classic standoff between the producer and the consumer. Is the consumer willing to pay the full tariff? And in such case, when will the producer pass on the full tariff to the end consumer? And for now, I think the Trump administration has been more right than wrong on this, meaning that the consumer does not bear anywhere near the full cost of tariffs, maybe even as little as 20% or something like that for now. That could obviously change. I've seen Goldman and the likes. By the way, Goldman needs a new chief economist, according to Donald Trump, right? But kidding aside, they claim that we should expect a full pass-through of these tariffs, say, come year-end or early next year. And I don't consider that unlikely. But since they haven't passed it on day one, they'll probably pass on the tariffs as part of what you would normally see as price increases, right? So maybe they don't assess that they can pass on everything right now, and instead they will slowly but surely massage these tariffs in. And in such case, I think Trump will end up winning this discussion. Even if they pass on the full tariff over time, it basically means that they pass on the tariff instead of passing on price increases instead, if you know what I mean. And they of course, they plan on increasing prices on a running basis. Every single enterprise does that. But if they keep the powder dry now, it's probably for a reason.
Yeah, absolutely. And that sort of dilutes the immediate effect, at least for political considerations. I mean, you a lot of people were expecting like a big hike for the price of an iPhone, etc. That's probably going to get, as you say, massaged in, going to get layered in over the next month. So very interesting that. Okay, Andreas, should we jump straight to the Alaska meeting and the Ukraine situation?
Yeah.
I think this was probably the hot take of the Alaska meeting. The Russian Foreign Minister Sergei Lavrov showing up to the meeting in a USSR T-shirt. I don't even know to compare that to, but that's a very, very strong statement. A very, very, very fashionable guy. This. Just to round up this Alaska meeting, and I think it was kind of a strange vibe because everyone was looking forward to this, very anxious. Are we going to get a deal? And the press conference, etc., was like, we had a great meeting, and that was that. And no news about what was discussed, what was the outcome, and we're only learning that by now, a few days down the line. Tonight, obviously, Trump is meeting with President Zelensky of Ukraine, a lot of the European leaders, in a hope to sort of to pass on the Russian messages and to hopefully get the Ukrainians to accept that to some degree, in the Europeans. So my gut instinct was that Putin had succeeded in delaying the efforts again, And you have to say that he did so. I mean, Trump, what happened to the new sanctions on Russia that we've been talking about for months? They were supposed to kick in if Russia didn't agree to peace terms. The war is still going on. Where are the sanctions at? But at least there's some sort of path ahead. There are some discussions to be had. And I think the Russians have been forced to become a little bit more specific and almost lining up a term sheet for Ukraine. And that's what's really interesting for me right now and what is keeping my hopes up. So even if this meeting was perhaps a little bit lackluster, perhaps it was the point to simply keep the momentum going and keep the channels open. That's the way I see it. I know, Andreas, you had a look at Poly Market. I don't think I got the chart in here. That's my bad. But I think the level was around a 38% probability of a ceasefire within 2025. I think it could be a little bit higher, and I think it could be a little bit quicker than that. But it is still a very, very much an unknown. So how did you see the market reactions from the Alaska summit, Andreas?
Well, I mean, first of all, it kind of showcases that it's not a base case that we'll get a peace deal, and I think in many ways for good reasons. On top of that, I think the most surprising element to this is that we see pretty decent relief price action in China. So I think some people kind of feared that, okay, if this meeting does not end well, we'll suddenly see a re-escalation of secondary tariffs versus all countries trading with Russia. We've obviously seen secondary tariffs added on India as a consequence of their trade relationship with Russia, but nothing yet on China. And it made me ponder. We're, by the way, long Chinese tech on a cocktail of this and AI catch-up bet in China. But it made me ponder whether China is really the true safe haven here from a geopolitical standpoint, because we've obviously had this almost Texan-style standoff between Xi and Trump during the spring. And ultimately, Trump ended up with slightly higher tariffs on China, which was probably one of his main goals. But it also showcased that China is probably able to withstand some sort of tit-for-tat embargo longer than the US for a couple of reasons. First of all, because they immediately curbed rare earth exports, which is a big mess for the West. And on top of that, the population in China, they're simply used to hardship in another way, they're used to hardship in a way that you cannot compare to the West. You'll simply end up struggling as a Western leader earlier. So I think for those reasons, China looks strategically solid here as a macro play. Also, since, for example, Hang Seng Tech, including the
we can show the chart here. Yeah.
The usual suspects, Alibaba, Tencent, etc., which are decent AI bets, by the way. It looks very cheap versus earnings. Earnings have surpassed what we saw in 21, where the Hang Seng Tech traded, twice compared to current levels. So I think there's a value play here, and everything that's happening geopolitically underscores that.
Really interesting, Andreas. So just to sum up our view here, I think it is still a significant probability that we do get some kind of deal, because I think the Russians have moved on a number of issues, specifically the political concessions, but still very, very much up in the air, obviously. But I think it is a little bit undervalued, that probability. We did an entire article last week on our modeling on how markets might react to a peace deal within 1 week, 1 month, 3 months scope. You can check that out on Real Vision for a deep dive into how various assets might react to a peace deal here. You also brought in this, Andreas, the odds for the Nobel Peace Prize of 2025, and I mean, I think it's going to be tough to find someone who was part of more peace deals than Donald Trump, especially if they get something done in Ukraine. I have zero confidence that he's going to get this peace prize, even though it means a lot to him. But we know he's been nominated. But I'm sure they'll find some writer or some human rights activist in Cambodia or whatever to give it to avoid the backlash of giving this to Trump. Elon Musk is an even worse bet in my opinion. But yeah, I don't know where your money's at on this.
I think the reason why Trump is so positive every time he talks about Norway is exactly this.
Yeah,
have you noticed that?
True.
You know, he's every time he meets with Jonas Stør, whatever his name is in Norway, he's so upbeat. And Norway is a great country, and we can learn a lot from Norway, etc. And you haven't really heard those tunes with any other country in Europe, really. So, and obviously the committee is appointed by the Norwegian Parliament, if I'm not wrong. I mean. But I'll have to disappoint Donald Trump here. Having spent a lot of time in Norway in my life, having met a lot of Norwegians, and knowing Norwegian culture, not least when it comes to political decisions, he's not going to get the Nobel Peace Prize. It's just not going to happen. So he should forget about it.
Yeah. I agree completely, Andreas. Okay, so on to other news, Andreas. You posted your Steno Signals weekly editorial this week, looking ahead of the Jackson Hole conference and obviously the speech by Jay Powell. What do you expect there? We've been talking about the possibility of the expectations of the September cut. Do you expect any signals in that direction, or what should you look out for?
Well, he kind of needs to say something. I mean, it's almost a fully priced base case from the market that we'll get 25 basis points in September. I'm a little in doubt myself, because I think it's getting increasingly clear that Jay Powell himself is not in team rate cuts. We obviously have a lot of members of the committee now openly supporting it, but it very much depends on the political pressure and whether Powell feels the need to sort of accommodate a growing but very vocal minority in the committee asking for substantial rate cuts. And in light of that discussion, Mikkel, I want to show this picture of a very, very beautiful man donning an orange suit. I think we have it up there.
There we go. Yeah.
The David Servos of Jefferies. He's in a relationship with Kellyanne Conway, and he's got strong market credentials. He's ex-Fed, by the way, and he's made a massive transformation in terms of his visuals. So this guy is now being brought up, and we brought him up, I think, 2 or 3 weeks ago, and when we did a little preview into the potential candidates. And I hold a very firm view on this. The market is way too honed in on mainstream candidates for this job. Look at the guy that he offered the job as BLS commissioner. It was a very unconventional pick, one that clearly led to some fierce reactions within the Bureau of Labor Statistics. I think Trump is the kind of guy who wants to throw a hand grenade into the committee when he gives the nod to the next Fed chair. And David Servos would be such a pick. I mean, a lot of the members of the committee would be like, okay, this is, because one way of ensuring that this guy is actually capable of forming a majority around big rate cuts, this guy is in favor of big rate cuts, is to, almost force resignations, if you know what I mean, from the committee. We've obviously already seen Ariana Krugler deciding to throw in her towel, basically, and leaving the job. And I think if he appoints David Servos, a few more members will probably leave, which is good. If you want to form your own majority, remember that the president's, he can sort of line up or tee up the nominees every time there's a new job available in the committee, right? So if a couple of members decide to leave because of this nomination, good news for Trump. So I think he's aiming for a hand grenade solution. This guy would be a brilliant pick. And therefore, I'm still waiting for that kind of fireworks before I really make a decision on what to expect from the Federal Reserve into next year. So the whole point, and the reason why I bring it up again now, is that maybe very short term here, the committee is not exactly where the Trump administration wants it to be, but it will be in 9 to 12 months from now. And I think we'll see major change at the Fed, one that will underpin complete debasement of the dollar.
Very interesting, Andreas. This obviously plays into to our overall narrative also that we talk about here at Real Vision. So, Andreas, just a few more thematics before we round off here. Back to the fuck coin. Not that I want to talk about fuck coin, but I asked one of those guys. He tried to explain it to me, DMs, and I was like, okay. But my question is, when fuck coin banana zone? What will it take? And he said, the ISM just need to stay above 50 or 60. I don't remember, but that's the one variable he was looking at. That's all it takes. Okay, I thought that was that was quite simple. And then you showed me this, because in your Steno signals this week, you did a roundup of which assets to look at when taking in the development and the ISM manufacturing into account. And this one, Andreas, you have to explain to me, why does Bitcoin have such a spread to, this chart essentially shows that Bitcoin is way too cheap if ISM manufacturing rises to 60. How can that be so massive?
Yeah. Okay. So it's actually pretty simple study, but yet a little bit complex, that I've done in my weekly, and you can obviously get all of the results across all assets and all markets in the weekly article on Real Vision Pro. But take a look at Bitcoin here. Currently, we're up 95% since exactly a year ago, while the model implies that if ISM rises to 60, which is debatable, we're not there by any means, it should pick up speed to 300% roughly on the year, right? So triple basically in value since the year prior. And this is basically, it's based on a regression. So when you look at the ISM manufacturing over time, or the ISM composite over time, and take the annual returns in Bitcoin, you see a very strong correlation to the cyclical developments in the economy, right? So what I think what mechanically happens here is that when the business cycle improves, you typically see a positive development in the money trends. You see a positive development in employment trends and wage trends and stuff like that. And you see an increase in the overall risk appetite. So that's why the correlation is as it is. I think for now, the important takeaway is that we're not even 1/3 of the way to pricing in a full cyclical upswing. ISM to 60 would typically be where a cycle peaks. We obviously had such a cycle peak in 21. And, all models with a forward-looking component to them point in the direction of, say, 55 to 57 now on ISM in 3-4 months from now. So where are we in this cycle, and what's priced in? Well, we're probably 1/3 of the way into a cyclical upswing. Obviously, there is always a risk that it could go in the other direction, but the point here is that it's very asymmetrical if you believe that the business cycle is accelerating, not the opposite. The market is pricing a mild acceleration of the economy, nothing more than that. And it's the same conclusion no matter whether you look at equities, commodities, foreign exchange, etc. I really get to that conclusion. The market is pricing a very mild reacceleration in the ISM index to maybe 52, 53, that range. So I see it constantly online right now. I see constantly from the investment banks saying, okay, equities have priced in an almost picture-perfect macro landscape. The answer is that's not really empirically true. The macro picture that is priced in is a very lukewarm one, which could ultimately, of course, end up being the case, but it's just not priced for perfection by any means. I simply have to stress that because it's so important that you don't buy into that narrative that this is priced for perfection, this is the peak, because it's certainly not if the economy accelerates. It's certainly not.
Incredible numbers, incredible chart, this, Andreas. It's going to be very, very interesting to follow. We're obviously talking a lot about the ISM scoring here, one of the few remaining numbers that we're actually following, perhaps. Andreas.
I so much want to talk about the chart that I sent you just 15 minutes ago, whatever it was, Mikkel, just before we went on air, because go ahead, Mikkel.
Here we go.
Yeah, but I had a chat with Jordi Visser, great guy, former market maker in the option space, in equities, etc. A tremendous curriculum, and he's ventured a lot into investments in the AI space and crypto space. And we had a discussion on whether AI could end up being, or Bitcoin could end up being the ultimate AI trade. And I think this chart is very telling in that regards, because this is the monthly survey from Bank of America. And they ask a lot of institutions. I think 2/3 of them are global and 1/3 of them are domestic in the US. So, everything from sovereign wealth funds to pension schemes to insurance companies to very large family offices and stuff like that. And 3 out of 4 in this survey respond that they have zero exposure to crypto. That includes Bitcoin in this. They probably have some indirect exposure via the S&P 500 now with MicroStrategy a part of it, etc. But
sure.
But direct exposure, nothing. If, and I stress if, some of these institutions start basing their investment decisions on agents, every single agent will tell you not to have this allocation. So that could be pretty material change, and that's why I actually like the way he framed it, Jordi Visser. You can go have a look at the entire interview I did with Jordi last week at the Real Vision platform.
Yeah, very interesting. I saw a lot of discussions on X last week about people posting, we're still so early in Bitcoin. People invested in Bitcoin, and that's people say, "Oh, we're not. You should have gone in at 10,000." I mean, if you believe that simply half of these or most of these institutions are gonna dive into crypto, it's things are looking very, very interesting, Andreas. Absolutely. Any final points before we round off here, Andreas?
I'll maybe conclude with a few remarks on the wall of worry that we're currently faced with in terms of inflation pressures. So if you can move to the chart on page 20, Mikkel, on the PPI, because it was a nasty PPI last week. I'll have to admit to that. We saw input cost pressures in both consumer goods, services, basically across the board. But if you look beneath the hood here, a couple of observations. One, it was very, very heavily impacted by portfolio fees, meaning that all of the aforementioned asset managers, they've had great returns since April thereabout. And you can see that in performance fees and whatever, and that feeds into the PPI. That's point number one. Point number two, this is an example of companies being reluctant to pass on the tariffs straight away. Why is that? Well, ultimately, and again, this is maybe my point of the week, you cannot have broad-based inflation across all goods and services unless there is an expansion of the money base to pay for the fucking goods and services. So those morons, most of them in investment banks, who discuss, well, will there be a lasting impact from tariffs on prices, etc.? Well, it depends. It depends on monetary trends. It depends on the monetary response to this. And for now, M2 and such trends or money trends, they're not increasing in what I would call a worrying way from an inflation perspective. That is the ultimate reason why you see a divergence between PPI and CPI, because they cannot pass it on. Who's going to pay? So I think that whole part of the discussion on tariffs is completely overlooked. You need monetary trends to support the notion that this will be very inflationary, because otherwise it makes no whatsoever sense to discuss it. Because if you leave the money trends constant and the amount of goods and services available to the public constant, up and add a tariff on some goods, you'll see a price decrease elsewhere. It's just simple math.
Which essentially makes the tariffs a corporate tax in some sense.
On specific sectors, yes.
Yeah. Very, very interesting. There's a whole political agenda to that. We'll get into that another time, Andreas. Great roundup today. Still looking very bullish. Let's see if we can get some fuel to that fire from the Washington talks later today, and a path ahead for peace in Ukraine. Look out for our articles. The Steno signal should be out shortly, if it's not out already, on Real Vision, with a deep dive into the ISM, and we have lots of other articles coming this week. And we have the monthly macro tomorrow, is it? I'm confusing my calendar here. I think it's tomorrow afternoon, European time, tomorrow morning, US time. So check in for that. Lots of great content for you over at Real Vision. Remember to sign up for the Pro Tier. If not, we'll see you next Monday. Hey guys, before starting the show, I just want to take a minute to talk about our good friends over at Bitwise, the $10 billion global crypto asset manager. On this show, we talk a lot about all the big stories. What's driving markets? What does the data tell us? What are you people missing? And as you already know, crypto is playing a much bigger role in macro. So it's becoming more and more important to really understand the stories driving crypto. Why is Bitcoin going up? Why is Bitcoin going down? What are the institutions doing? What are people missing? That's why Bitwise launched the weekly CIO memo, a quick summary each week of what's really moving crypto markets. It's written by the CEO, Matt Hogan. Matt's one of the best in business at bridging the worlds of traditional finance and crypto. It's really a great read. It's clear, it's bold, and it's very thoughtful. I highly recommend it to anyone who wants the latest insights and hottest takes in the crypto world. So head on over to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo and check it out for yourselves. Always, of course, carefully consider the extreme risks associated with crypto.
Hi, here's a message from our partners, VeChain. Launched all the way back in 2015, VeChain was built for real-world utility before most people had even heard of blockchain. From powering real-world solutions to partnerships with global brands like the UFC, VeChain has boasted 100% uptime for nearly a decade, and now it's entering a new chapter, the VeChain Renaissance. This isn't a rebrand, it's a rebuild from the ground up, fueled by adoption in the VBeta ecosystem and an ambitious technical roadmap. Renaissance is about building a faster, more flexible core protocol designed to meet the builders and drive mass adoption. It's an evolution that brings VeChain closer to their vision of a world powered by Web3 without compromising on reliability or stability. The future is here. It's scalable, sustainable, and evolving with purpose.
Binance is the world's #1 crypto exchange, trusted by over 280 million users worldwide for their world-class security, protection for users, like its secure asset fund for users, the SAFU fund, an unmatched portfolio of digital asset products and offerings from trading and finance to education, research, social good, payments, institutional services, and Web3 features. Crypto is better with Binance. Binance makes starting crypto as simple as it should be. Whether learning about crypto on Binance Academy or browsing hundreds of assets and viewing your newly created portfolio on a clear, easy-to-track dashboard, Binance helps you go at your own pace. And for more advanced traders, Binance Pro opens up industry-leading services for trading professionals with fully bespoke trading products, along with a suite of white glove services for VIP and institutional clients. Binance provides 24/7 customer service with some of the lowest fees and deepest liquidity in the market. It's no surprise over 280 million users trust Binance for everything crypto. Buy, sell, trade, earn, live crypto. The future is yours. Build it. Download Binance today and get started in minutes. Binance is not available in certain countries, including the US. Checks its terms for more information.